You might be wondering where you stand financially in comparison to the rest of the population. Are you in the black or the red in terms of money? How do your earnings and expenses compare to the national average? Some of these average individual financial data may surprise you. If you find the video useful, please consider subscribing to the channel and giving it a thumbs up. Housing costs account for approximately 34% of annual household expenditures, according to data compiled by the U.S. Department of Labor. That works out to about $1,900 per month. Homeowners must contend with rising home prices, rising loan rates, and mounting bills such as insurance, taxes, utilities, and maintenance, while renters must contend with rising rents and a scarcity of available rentals. Overspending in this area has an impact on the affordability of both renting and purchasing. It can be harmful to one's financial situation, making it difficult to meet other needs. Housing costs can quickly deplete a person's salary, leaving little for other necessities such as transportation, food, and clothing. If this is the majority of your funds, proceeding will be difficult. The monthly payment on a new car is $700, according to the average monthly bank rate, while the monthly payment on a used car is only $525. The figures may appear absurd, which is because they are. The good news is that auto payments aren't eating up as much of most families' budgets. According to Penguin, the average American household spends $819 per month on transportation, ranking it second only to housing in terms of expense. Isn't it impossible to accomplish? Considering that this includes everything from fuel to insurance to repairs to new vehicles and more. A new car may be a reasonable reward for some people, but unfortunately, many people succumb to the temptation and buy one anyway. Remember, it will still spend the majority of its time in your driveway. The median age of first-time homebuyers in 2017 was 36, up from 33 the previous year, according to the National Association of Realtors. Despite the availability of financing for first-time homebuyers with 5% down or less, the market remains competitive. This does not immediately qualify them for a loan. Prices have risen in recent years due to a scarcity of available inventory, and these rises have been exacerbated by the aforementioned factors. In 2022, the national average for a home would be around $350,000. According to a Zebra article, taxes, insurance, utilities, and maintenance costs can easily equal the mortgage payment on a monthly basis. Although it is true that the cost of purchasing a home is increasing, but that's not the only thing that's on the rise. For decades, the average American home has grown in size. Buyers' increased skepticism may also be contributing to these exorbitant prices. Single-bathroom homes with few bedrooms and outdated kitchens are becoming less desirable as fewer buyers are willing to make these concessions. The average borrower owes approximately $38,000 in federal student loans and nearly $55,000 in private student loans. These figures show that the average student loan debt has tripled since 2007. It may seem excessive to incur $38,000 or $55,000 in debt in order to further your education, but that is what it takes, according to educationstatistics.org. However, this debt can be devastating for a recent graduate when they enter the workforce with no experience and discover that their starting salary doesn't go very far after covering basic living expenses, and so on. These debts are on top of any other adult debts that a recent graduate may have. When faced with the prospect of paying their own rent for the first time, many recent graduates choose to finance a more modern vehicle to replace the one they used to commute to school. Many of these students are in debt because they did not conduct a cost-benefit analysis of their potential majors. According to LendingTree data, the average American household spends $1,233 per month on debt service. Mortgage payments, car payments, personal loans, credit card payments, and student loan payments are all included in this total for homeowners who have a mortgage. It doesn't appear to be too bad. Those who did not already own a home were barred from participating in this study. Monthly payments are a death trap because they prevent you from paying your bills and saving for the future with the money left over after taxes and loan payments. Not only are you paying a fortune in interest to your bank and credit card companies, you'll struggle to save money for emergencies or savings, increasing the likelihood that you'll need to borrow money again to cover unexpected costs. Furthermore, when given the option to pay in installments, customers frequently make unnecessary purchases and rack up large bills. According to a 2019 study by Ladder & One survey, the average American spends $1,500 per month, or $18,000 per year, on discretionary purchases. When you consider how many people are struggling to make ends meet, that sounds like a lot of money, but they blame everything other than their own spending habits on external causes. The total reflects wasteful spending on items such as recurring restaurant bills, impulse purchases, and more. You should prioritize, but self-reward is an important part of maintaining a healthy relationship with money. To summarize, people who spend $1,500 on frivolous items should make timely payments to themselves in order to keep their debt under control. When someone complains about their financial situation, you should not assume the worst. One has to wonder whether they are making the best use of $1,500 per month. People approaching retirement age do not have millions of dollars saved up. In fact, it's a long way away. According to the Federal Reserve, the median amount of retirement savings for people aged 55 to 64 is $134,000. Individuals aged 65 to 74 had an average of $164,000 saved for retirement. At this rate, the money you save will not go far. With today's living expenses in mind, a $200,000 nest egg with a 4% safe withdrawal rate will generate approximately $8,000 per year. The average Social Security payment is around $1,550 per month. Some retirees, particularly those who live in a two-income household and can afford to split significant expenses, may be able to survive solely on Social Security payments, but the vast majority will need to work, at least part-time. You can easily exceed these goals by putting aside even a small amount from each paycheck. According to the Bureau of Labor Statistics, the median salary for people aged 20 to 24 is slightly more than $30,000. The median income for people aged 25 to 34 increased to $51,000. And the average salary for people between the ages of 35 and 44 increased to nearly $60,000. Where you live has a big impact on whether or not these are comfortable incomes. In states with high living costs and high taxes, $50,000 or $60,000 won't get you very far. The 45 to 54 age group experienced a final increase to around $61,000 before leveling off and slightly declining. However, in areas with a low cost of living and low taxes, this may be sufficient to cover basic expenses. The presence or absence of roommates is also an important consideration. It's much more difficult to get by on a regular wage if you have to pay all of your own rent or other housing expenses. Those who live with roommates or spouses have significantly more financial freedom. Looking at these numbers, you can get a sense of the average person's situation and conclude that many people have room to grow. You don't have to be broke all the time, and you might be more than just average. Anyone, with some self-control and foresight, can achieve success far above the norm.